Hello everyone, welcome to another episode of the Space Road podcast. This is a slightly different one. I talked to two people for the first time from a Twitter account by the name of DeFi India. This particular account tweets a lot about crypto projects, DeFi projects, and about Indian cryptocurrency ecosystem and regulations around it. These guys choose to be anonymous at this point of time, and that's why we don't have any video for this particular episode. But this is one of the most interesting conversations that I've had on my podcast yet. Both of them come from traditional finance background, and they have worked with different companies into investing, trading, venture capital, and both of them have a very good understanding of the overall crypto ecosystem. We talked about what is DeFi, what are the different categories of projects within the DeFi ecosystem, and then we also talked about what are some of the blue chip projects within each of these categories which people can go and use today. Then we also talked about what are stablecoins, what is the importance of stablecoins in the DeFi ecosystem or the larger crypto ecosystem as a whole. And then we also talked about different types of stable coins and how their market looks going forward. Then in the later part of the podcast, we also talked about Indian government's stand on cryptocurrencies, how it has changed for the past couple of years, and with the introduction of 30% tax and 1% TDS in the latest budget session, how people should read this, how people should understand this, and how people should approach it. And then finally, we also talked about Bitcoin versus other cryptocurrencies and the crypto ecosystem overall. There is a very valuable piece of advice towards the end of the podcast. So make sure that you listen till the end, and I hope you enjoy this conversation, and let's get started. Hello, DeFi India. Welcome to the Space Road podcast. Thank you for doing this. How are you guys doing today?
We're doing fantastic. Thanks for having us, Chetan.
It's my pleasure. So let us start with a basic introduction of like who is behind DeFi India. If you guys tell me a bit about your backgrounds and probably how your crypto journey looks like and what led you guys to starting DeFi India platform.
Sure. I'll go first. My name's Pat. Of course, we're using pseudonyms here. My name is Pat. I studied computer science, but I was interested in finance. So I basically dabbled in both of them, but my core education is in computer science. So I do understand code and I understand the underlying tech behind a lot of things. But saying that, I've had over a decade of experience in finance, and I've worked at some big shops on the trading floors and otherwise, and I've also done a couple of years in consulting. So I was covering a lot of products, commodities, FX, options, swaptions, and so on and so forth across multiple places in Asia and overseas as well. As for crypto, I got into crypto in 2016, and my journey in crypto was after seeing Bitcoin over and over again in one of these tech blogs that I was watching, and eventually I ended up seeing like, what is this about, and I ended up buying some Bitcoin mining shares. So once I bought that, then I got into the rabbit hole and dug deeper and deeper and deeper and got really deep into crypto. And now it's been over 6 years that I've been tracking crypto and following it, and currently I am full-time in crypto. So that's me.
Okay.
Yep. So you can call me Sam. I am a chartered accountant by qualification. I'm a part of the traditional finance venture capital industry in India. We back consumer technology companies. I've been in crypto since late 2017, early 2018. So around the time when we crashed from 20K down to I think 3K or so. That was of course my first exposure to crypto. Primarily Bitcoin. I got into Bitcoin primarily because I've been keenly following economics, pretty much forever. And, when Bitcoin came around, I was initially apprehensive about, just it being an alternative or a substitute to fiat currency. And, like everyone else, sort of Bitcoin has a way to grow onto you. And so I started digging deeper, trying to understand what it's about, understanding about its history and monetary history at large, following some of these guys on Twitter, and then, like Pat said, went into the rabbit hole and never seen back again.
Yeah, I mean, that's how it is for most of the people, I guess, about crypto. Yeah, I mean, very nice to hear both of your backgrounds. Both of you are from traditional finance background, and so is the case with me as well. I have worked with several Indian banks into wealth management and into transaction banking. And during the same time, I figured, I came across Bitcoin. For the first time I came across Bitcoin, I just kind of ignored it. But for the second time, I started paying attention and started reading some books, started listening to podcasts to build a better understanding for myself. And that's how it is for me. And I am also like into crypto full time now. And it's great to hear you guys' story. So my next question is,
yeah, I was just gonna say, very, very nice to hear as well, full time. How's it treating you now?
So far, so
very
good.
Hard, isn't it?
Yeah, I mean, at times it gets hard to keep track of everything that is going on, but I guess that's how it is. So far, so good for me.
I guess that's been the journey for. Yeah, I guess that's been the journey for everyone in crypto. They're starting with Bitcoin, trying to understand what it is, and then eventually, creeping up from there.
Yeah, for sure. Okay, guys. So my next question is, if you want to explain a bit about like what DeFi India is and why you guys started this, or what is your objective? What are you trying to achieve with DeFi India?
Sure. So look, I mean, we're all, of course, fully aware on the same page that, crypto is seeing a massive adoption through the world, particularly in India. So a fair estimate of the number of crypto users, and this has been hotly debated recently, if you've seen some of these tweets, is I think a fair estimate is between 2 to 3 crore users. In fact, more recently, CoinDCX pointed out that they've hit 1 crore the 1 crore user mark. So between CoinDCX, WazirX, OneSwitch, Kuber, and things like these, I think exchanges like these, I think, were easily more than 3 to 4 crore users who are into crypto, essentially actively or passively. Now, from that market, we've got about over 18,000 tokens, I guess, roughly. And I won't be sort of going out on a limb when I say that 99.75% of this market is pure garbage, and I'm sure you guys would agree. So that leaves about 0.25% of the 18,000 token market, which is maybe roughly about 45-50 tokens. Now, we've got scam coins, which either don't deliver, something like Cardano. And I'll take the liberty of naming these projects because, I think that's the culture of the community. Or coins which essentially have no future, something like XRP, and you still have a huge army. You've got folks pumping these coins and shilling these coins on Twitter. And, most of these actually have no future at all. I'll give you an example. So for instance, some folks, we've seen some projects recently, and, any person with a little bit of a normal, economics or commerce or, common sense background would agree that high APY projects can't sustain. So the reality is you either have high APYs with a high inflation, which means that your token values essentially decrease by the day, or you have low APYs with controlled appreciation and prices, so you see a rise in prices of some of these tokens. You can't have both. Generally, you can't. In some of these projects, when you see, masterstroke from one of these devs, maybe yes, but 99% of the time it doesn't work. But we've, on and off, we've seen projects like Home Finance, again, which purported to replicate the reserve system and essentially took a lot of money, set up a DAO. The token market cap essentially became 5x of the reserve balance. And, sort of the backer said that it will continue growing because they're doing something different, but they weren't really doing anything different. And, its latest price, I think, is about $75 when I last checked. And the market cap is more or less closer to the total reserve that the treasury has at home. And then we saw a bunch of replicas of Home Finance as well come up where, everyone started saying the 3-3 meme. So the bracket 3,3 meme where, you shouldn't sell, you should stake and huddle and things like those. And the entire community went behind that. A lot of naive, innocent users essentially saw that, this is the best way to make a lot of wealth overnight. Unfortunately, most of these stories, they just end up badly. So, that sort of made us believe that India as a demography, will have a lot of these participants. So just to give you a perspective, India has, of course, everyone's spoken about this. India has the largest youth population. We've got 470 million people. So that's 47 crore people, individuals essentially, that are between 15 to 34 years old. And only 20% of these folks actually have formal employment. So 20% leaves about 400 million people still with no means of any formal employment. When I say no means of formal employment, it means no paychecks or no, certainty from one paycheck to another. Now, these individuals, 470 million people, and by the way, if you carve out a nation with these 470 million people, you'd see China and then India old population and then India youth. So that's how populated our youth population is. And essentially, these guys are all looking to become early participants in your waves and products and services, right? Because every generation has seen its asset class. And that asset class has to, be created within that generation and absorb the wealth of all the older generations cumulatively. So essentially, the generation of our parents saw a little bit of real estate, but a lot of equities. So again, just to give you perspective, Nifty started in 96, Nifty 50, with 100 on the index, and it's currently 17,500. So in about 25 years, it's given a 175x growth. So that's what the previous generation saw. The one before that was primarily in real estate and gold. So every generation, of course, has its own asset class, which people participate in and create wealth. And, we believe that one of these asset classes for our generation would essentially be crypto. And, this will help in tremendous wealth creation and, essentially help them leapfrog through the wealth gap that exists between, their generation and the predecessors. So, look, our primary mission at DeFi India from day one, since we've started operating the handle, and even in our personal lives, through our networks and social networks and family, has been to provide general education, awareness, and actionable insights, on crypto products, protocols, regulations, and trades. We're not full-time content creators or crypto influencers. I'm sure you must have seen that tweet that I had a couple of days out that, look, we're not into this full-time. We're only here to spread general awareness, and that includes general awareness not only on crypto but on finance and economics as well. And you must have seen us. We generally pop in and out during times of events. So if you remember, you caught us in one of these Twitter Spaces session that Kashif held, where Tanvi and I got into discussion around how value can be tracked across protocols through chain analysis. This was, just when the parliamentary debate around the crypto ban was getting really famous. And then very recently, you probably saw us again tweeting very actively around the crypto tax. And we were one of the first ones to actually highlight the issue of 194S. So while everyone was busy complaining and, complaining about the 30% tax, we were one of the first ones who actually highlighted that 194S, the TDS section, actually, the 1% withholding tax on exchanges, will actually kill the industry, and it's just going to completely, demolish the Indian trade book, essentially, in the order book. And so, to your question, in short, we don't really have a vision per se at the moment for DeFi India. We're in this because we love the community. We'd like to see it grow. We love the fact that there's a lot of genuine adoption and widespread awareness. We're happy that there are a lot of other full-time content creators and influencers from India in the space, spreading a lot of knowledge, to ensure the general well-being of all the participants in India. So for the foreseeable future, at least, we'd like to stick to providing valuable inputs. And then maybe, when the time's right, we try to figure out a place for ourselves in the larger ecosystem, in the larger India crypto ecosystem.
Mm-hmm. Yeah, makes sense. So I would like to come back to the point of like TDS and the 30% tax that the finance minister has announced. We'll come to that in a while. But overall, I understand that the numbers are somewhat inflated for the total number of crypto users in India. Some newspapers or some media houses has reported it has like more than 100 million, whereas that is not true. Collectively, it seems to be like 20 to 30 million is the right number to talk about. I I agree to that point. And yeah, India does have like the highest number of young population across the world. Crypto can definitely serve as the wealth creation for this particular generation. And there is definitely need for enhancing awareness about the right, providing right knowledge, providing right information to the people. So that is what I get like DeFi India stands for as of now, and that is what you guys are gonna continue to do. Pat, you want to chime in and talk a bit about it?
Yeah, no, I agree with this as well. At the moment, DeFi India is here to ensure that more and more people know about what this entire new sector is. Web3, decentralized finance, metaverse, NFTs, all of this stuff. We cover all of those things. And one of our goals is also to ensure that people don't get rugged, or to help people, not lose money on stupid things without doing some due diligence. If we catch anything like that, we always post it and we try to spread the awareness on that. And over the long term, we just hope to contribute to the community and help everybody grow in this new ecosystem, and then see how it goes over the next couple of years.
Yeah.
In fact, you probably didn't see, but Pat was one of the first guys to actually expose the BollyCoin project. So that's a conversation for another day. But he actively tweeted it out and said that how this, the Salman Khan BollyCoin.
Okay.
Yeah, absolutely.
I got a quick anecdote that the BollyCoin thing, I think they launched it, Salman Khan launched it. I had to be on Twitter, they tweeted, and 10 or 15 seconds after, I'm like, oh, okay, interesting, let's see what this is. And I went onto the website and I saw the white paper, and I was just like, my God, they spelled their own coin's name wrong. There was no specific details. If you actually went to Etherscan and you looked at, where the coins were going, it looked like they kept a lot of them in their own treasury wallet, and it was just entirely shocking the way it was done, and untransparent and stuff. So yeah, I was one of the first ones to go on and start talking about it very vocally. So things like that is what we hope to do as well over time as this industry, grows, to help people understand those things.
Yeah, and we need these kind of voices which would actually understands what is going on, and if you should believe it or not. Because even though you said that one of your goal is that to help people from getting rug pulled, but I guess that is also very hard, because crypto, DeFi, NFTs, these are become metaverse, these have become buzzwords all around, and everybody is trying to make a quick buck. They think that this is get rich quick scheme, and they don't pay much attention. If their favorite star is coming up with some sort of NFT, they would be like, yeah, this is something legitimate, let me put some money.
His movies are better though, so that's okay.
Okay. All right, guys. I understand what you guys are trying to do. I think that is the right thing, or right path to take, and we definitely need your voice to keep getting louder and louder as we progress. Okay, so let us talk a bit about basics of some crypto narratives like DeFi, and then certain things within that ecosystem, and then probably we will get into India specific regulations, what the government is saying, and how people should approach it. But to start with, how do you guys define DeFi?
Yep. So DeFi in general, for people who don't know, stands for decentralized finance. So finance, everybody knows. So what does decentralized mean here? So decentralized here basically means you could do all types of financial transactions without an intermediary or a gatekeeper. So normally, for all types of financial transactions you do today, you either interact with a bank, or you interact with a broker, or you interact with a service provider like Paytm or BharatPay and so on. In decentralized finance, code is law, and you don't deal with any sort of intermediary. You deal directly with a piece of code, which is generally also referred to as a smart contract. And the code does all the computation and everything that is necessary for the transaction to go through and work. So no middleman, no central control, no central database, so to speak, or no gatekeeper that can prevent you from joining into the entire global financial ecosystem that we're building now. So a simple example for people to take away is that DeFi flattens the world. So imagine you're just a farmer somewhere in India, and you want to participate. You've self-taught yourself. You want to do good for yourself. You want to grow. You want to set your children up for the future and stuff, and you figured out that, I really need to invest in this one or two funds, for example. But those funds right now are being run out of New York, Manhattan, and Elon Musk is invested in it. Jeff Bezos is invested in it, and so on. So how does this farmer in India, who's educated himself and he knows what's going on and he really wants to be a part of that, how does he actually even participate in that? It's not possible at the moment. It's impossible. It's impossible even for very, very connected people. Maybe only somebody like Ambani can get access to the same sort of funds that Elon Musk or Jeff Bezos have interest in. None of us could actually get access to that. So basically, decentralized finance allows you to get access to any of these things with a single click using a web wallet. So a web wallet like MetaMask and stuff, the farmer in India can go like, okay, I really like this. I want to get exposure to the same sort of assets as Elon Musk has in New York. And as long as that fund actually, participates in the DeFi ecosystem, you log on, you transfer some USDC in today's case. Maybe in 5 or 10 years, we'll have an Indian rupee stablecoin. And you just click and you commit your money to the fund in New York. And it can all happen in a single click with no hassles. And it flattens the world and it makes it a fair playing place. So you are participating in the same wealth creation effect as with Elon Musk or Jeff Bezos in that example. So that's the power of decentralized finance. And that's why we really look at it, because we are from the financial sector as well. And we can really see the power of this. No more closed gates, private boys clubs, or so on and so forth. It flattens the world and everybody gets access to the same opportunities.
Okay. Yeah, I mean, I get that example. It's like very well explained. But do you guys want to talk a bit about like a very basic use case of traditional finance and what are the products or protocols that you can do in decentralized finance today? Investing in a fund which is like traded at a global stage is certainly a good example. A lot of people can relate to. But say, for example, what things that I do with my bank today, I go to my bank, I deposit my money, I get some interest on it, or I go to a bank to get a loan. Or I go to my bank to get an insurance of sorts. So the question here is like, what protocols in the DeFi ecosystem you think have real world utility today, and which you can use instead of going to a traditional finance bank?
Okay, so I'll split this question into two parts. So first, I'll split DeFi into 5 categories that are very important now.
Okay.
And then I'll talk about the use cases per category and how the common man can start using DeFi today, and then you can project it to how you could use it in the future. So the 5 categories that DeFi could be roughly split into today is 1, borrowing and lending protocols. So that is the same as your bank, your ICICI, Kotak, or your SBI, or so on. So it's like a digital bank that runs on the blockchain. And examples of the protocol are Aave and Compound. So let's say you've got $500 of Ethereum, and you really wanted to get some rupees in return or dollars in return. You could go to Aave and you can pledge your Ethereum over there. You can start getting interest on that. You can borrow on the back of that Ethereum, and you can also lend that Ethereum and start getting interest on that. So it's quite similar to the banks that you have right now. You get some rupees, you put it in the bank, and then you get an interest on that, and you get a 7-8% interest, whatever the term deposit rate is. So that's already available in DeFi in the borrowing lending sort of sector with Aave and Compound. That's part 1. There's part 2 now, the second part of the DeFi category, which is DEXs, also known as decentralized exchanges. So some of the examples of this are Uniswap, SushiSwap, DYDX. What do these DEXs allow you to do? They allow you to exchange certain tokens, so from one to another. So right now you need brokers to do that. So you'd have to log on to one of your brokers with a DMAT account to be able to swap between one share to another share of a company. But Uniswap, SushiSwap, and DYDX and protocols like that, they allow you to just swap in a trustless way. So you can swap from any asset to any asset without having to use any broker or paying any of those fees and other compliance sort of issues and all of that stuff. So it's very trustless in that sense. The third category in DeFi right now that is happening is derivatives. Derivatives is basically anything that is not vanilla sort of financial product, such as options or synthetic stocks or even perpetual futures that some people in the trading world would know. So they actually allow you to just speculate on the movements, go long, go short, do things like that in a trustless way as well. So in the DeFi category, you could do that using DeFi, DYDX or synthetics and mirror protocol and things like that. So those are derivatives, which is a third category. It's obviously for a little bit more advanced users. So right now, if you wanted to do derivatives, there are not many options for the normal person. Like you can just go and buy stocks, but short selling is a pain. You can't really, buy. You can buy some futures and options, but there's certain restrictions on volumes and stuff. But in using DeFi, you could do it with the global, global stocks and global exchanges. You could tomorrow, if you thought that Samsung listed in Korea is going to go up or down, you could even start trading that. You're not restricted to what's in India only.
Plus,
so
you
that's
can
the third.
plus you can do futures and option on any of the crypto assets, unlike in traditional markets that is available only for, say, limited stocks within within India also. I mean, forget about the international markets, but within India also you can do that only on select few stocks. And
Yes.
And I think I'm not sure of this, but I guess there is a margin restriction for stocks, and that should be very high in DeFi derivatives. If you guys have any idea.
Yes. Normally, all the derivatives in DeFi, because it's such a new place, it's always over collateralized. So over collateralized basically means the simplest example here is if you want to buy $100 worth of things or trade on $100 worth, you need to have at least $150 in your account. So there's always a 50% over collateralization requirement, usually in a lot of the derivatives in this space. And even protocols like synthetics and mirror, you always need to over collateralize. So that's because it's in the formative stages right now. Liquidity is weak and stuff, but we hope to see that grow over the next couple of years. So that's the third category. I'll quickly go to the fourth and the fifth one as well. So the fourth one is just simply payments. So I'm not sure if you saw, but Solana Pay is a thing right now, which allows you to basically transfer money from India. Let's say somebody's in Antarctica, and let's say they accept US dollars. You could send something from India to Antarctica in under 2 seconds, and it'll be in the person's wallet in Antarctica. You can send it to somebody in the Amazon rainforest in Brazil. It'll be there in under a second, and you'll pay a fraction of a cent in fees. It'll be there in 2 seconds. So payments is a huge thing as well. So right now within India, you've got a lot of payment options like Paytm, Bharat Pay, all of that. However, the moment you go international payments, it gets very painful. How do you pay that? The fees required. The fees are just ridiculously high, like $20, $30, $40. It's just ridiculously high to get even a small transaction through. So payments is another use case of DeFi. And the last use case is asset management, which is what I explained with the farmer case, where you could spin up a fund in India tomorrow, or you could spin up a fund in New York or in Finland or in Korea, for example. Korea is hot right now with Samsung and Kia and Hyundai. All these brands are there. You could spin up an asset management firm there, and anybody in any part of the world can participate in a fund from anywhere in the world, which is very important because when you think about it, there's a lot of people in the world that don't have access to proper financial products or serious fund managers. They're basically just doing payday lendings and day-to-day loans and stuff. It's hard for them. So having a formal sort of structure there where they can invest, where the actual smart money is invested, is actually beneficiary for the entire world. So that asset management can be done right now as well using DeFi. And there are 2 or 3 important protocols there as well, including SET protocol. There's a thing called syndicate.io where you can start your own fund there and ask people to start pledging funds into that, and you can structure it in a like a decentralized fund, so you can buy different things, different assets, and I think they'll be getting stocks and stuff soon as well. So you can have decentralized sort of fund management as well in that. So those are the 5 sort of categories.
Just one point over here, so Chetan, I'm sure you'd appreciate that all of these, all countries globally, including India, they have really complex regulations and policies around the minimum net worth that you need to participate in these fairly complex products, and these are really high yielding, sort of high risk reward products and services. But like for instance, in India, SEBI has a minimum net worth criteria for 1 crore rupees if you want to invest into, it could be a venture capital fund, it could be a hedge fund. You can't even short sell as a retail guy. There's no short selling allowed except for that 1 or 2 day window that they, essentially have to square off the position on the same day. And of course, like with what Pat mentioned with asset management indexes, that's no longer a concern because you're not governed or ruled or restricted by any one of these regulations where do not allow the normal retail participant to become an active sort of player within that segment.
Yeah, for sure. Yeah, I mean that is a very good framework, like 5 different categories broadly you can look at it. And I think for a normal person who does only basic banking and who want to, kind of gradually explore further, I think the two out of those 5, two make most sense to start with. Probably borrowing and lending is something that people can start with, where they can earn a higher interest than their bank account gives them. Plus they don't have to do KYC of sort, and they can explore multiple different options. And the second one I think would be very valuable is payments. Of course, within India, payments are very seamless these days, but going forward, out of India payments within India, merchant customer to merchant payments can also be through crypto, and that can be really value adding. And then certainly dexes make a lot of sense next, if you want to invest into different crypto assets. And then if you want, if you have more money and if you want to have access to more financial products, which is not possible for low net worth individuals, so to say, due to the guidelines, regulatory guidelines mentioned by Sam. So people like that can get access to derivative products and then asset management products. So yeah, I mean that is a nice framework to think about it. Makes a lot of sense.
I would like to add one more thing. So we talked about all the different ways people can use it. So yes, you're right. With lending, you can lend stable coins and get extremely high interest rates because you don't have to worry about the entire financial infrastructure of databases, ATMs, offices, all of that stuff. You just have a web wallet and you get a high yielding interest rate. And again, this is equal for all. So the interest rate that, for example, Elon Musk might get is something that you can get as well in decentralized finance in an ideal world. Now, DEXs actually are not only important for swapping products, but one of the crucial points in that as well is starting your own project. So raising capital and bootstrapping your project as well. So there's a lot of these IDOs, which are referred to as initial DEX offering. So if you've got an idea, historically, you had to go and you'd have to go to VC funds, you'd have to go and pitch to so many people. They would have very unfavorable sort of conditions. They'd want 50%. I'm sure some people have seen Shark Tank. They'll want 30%, 40% of your equity. And they'll give you favorable terms, sometimes unfavorable, sometimes favorable, and so on. But in DEXs, you can launch an initial DEX offering, and as long as your product is good and you believe in it, and you have some YouTube videos explaining to the community what you're doing, you can raise capital without having to dilute your equity at all. You can raise a lot of capital. You don't need to pay bankers. You don't have to pay VC funds. You don't have to do a lot of that stuff. So it really helps, bootstrapping projects and building projects from the ground up and stuff as well. And not only that, there's a lot of people who have, sometimes not that much, but sometimes a lot of stocks that are just sitting there. For example, some people have 5 crore rupees worth of stocks in their stock portfolio or something. Now, what do you think the banks are doing with them? Do you think they're just sitting there? No, there's actually an entire securities lending desk that actually then uses those stocks and lends them out to other people. And then banks make a fat commission on top of that as well. So that's how the entire short selling and long market and everything else happens. So with DEXs, in the future, in an ideal world, you pledge that liquidity yourself into a pool and you get the commission. So right now, the banks are obviously undercutting you and taking a huge commission on your entire portfolio. But in the future, you can be an LP into one of the pools and you get a yield on your for providing liquidity or a cut of the fees. So it's really, really, really getting rid of all the centralized sort of entities that are just sitting there seeking rent, trying to get money from people from different ways, and it makes it really, really, really transparent. And you get a chunk of everything that you make with higher yields, liquidity provision fees. You get a lot of that stuff for yourself instead of giving it away to bankers and VCs. So that's another important point with DEXs as well.
Yeah, for sure, for sure. Certainly, I mean, crowdfunding is one, and providing your own liquidity and getting its benefit without any third party involved in between. Yeah, I mean that is huge. Talking of like crowdfunding, before Dexes, I guess the 2017 bull run was all around ICOs, and a
Yep.
lot of projects that we see today are have emerged from that ICO boom. Of course, I mean 95% of them have failed, but the handful of which have survived are doing well. So, if you can just quickly, drop some names of projects that across all these five categories, which you think have are like doing good and have created good utility for the users.
Sure. So I don't know if they did ICOs because some of them did the coin list sort of thing, because I think projects that are coming out of the United States, they
Yeah.
cannot just do an ICO or IDO because the regulators were really after them. So they went through the coin list offering, which is a bit more organized sort of way of doing that. But roughly, in terms of the five categories, the top picks over there, which I would consider blue chips now. When I say blue chips, that means the chance of rug pulling is low, the chance of hacks are low. It's well vetted teams. They know what they're doing. It's not some anonymous person who's just running it that can take all your money and run away. So we're talking about some of the blue chips. So in the borrowing and lending space, without a doubt, it's Aave and Compound. So Aave is AAVE, which is a very famous borrowing and lending protocol. They're currently on Ethereum and they're also on Avalanche. And I think eventually they have plans to go on to other chains as well. And in fact, they have an institutional product as well. So Aave is really getting it's blue chip there, very nice.
Yeah.
And Compound as well is good there. In the DEX space, you have Uniswap, which is obviously very good, especially with Uniswap version 3, which actually helps you have constrained liquidity in a certain range. For stable swap sort of pools, you have Curve and so on. I would have talked about SushiSwap right now, but they've had a couple of dramas recently, and it's to be seen if they emerge from that, unscathed.
It seems risky to talk about SushiSwap right now.
I agree. So historically, it was going all right, but they've had a lot of dramas recently, so I can't recommend that. In that sense, at the moment, it's Uniswap on Ethereum, and Uniswap for DEXs basically is a good one. There are other protocols like on Solana, it would be Radium, which is blue chip. On Avalanche, it would be Trader Joe. So obviously, every sort of major L1 has their own sort of Uniswap clone, which they've retrofitted to needs of that ecosystem.
Yeah.
In derivatives, hands down, DYDX is very good, and in fact, DYDX actually at some point had a high, which is fantastic. And I think that actually happened, that coincided with the China ban. So I think China started banning a lot of those Huobi exchanges, and a lot of the exchanges in China, DYDX just went to decentralized trust list exchange like DYDX. So DYDX in the derivative space is really good. Options, I would recommend, if you don't know what you're doing, stay away from it at the moment, because the pricing of options is still very, very weird in this entire ecosystem. So there's no DeFi options play right now that I can recommend. There is a centralized one, which is Deribit, but there's no DeFi or decentralized sort of way of doing options at the moment. In payments, there's obviously just the standard wallet-to-wallet transfer. I would recommend Solana there because it happens in under 2 seconds. And it's a fraction of a cent for fees. Ethereum, you have to pay a couple of bucks, and Avalanche as well. So Solana is pretty good for just standard payments. And for asset management, I can recommend two things which are really nice. Blue chip, which is the SET protocol, which allows you to create an index of different assets. And then there's syndicate.io that allows you to create your own fund, basically. So if you've got a good model and you're in the industry, or you want to create your own fund and you think you've got great ideas, you can go and create your own fund in a decentralized way and start raising capital basically through marketing, YouTube, or so on and so forth, and raise capital that way. Yep.
Okay. I think it makes sense for any new person who is like trying to explore this ecosystem. It is better to stick with like blue chip projects that have proved themselves and they know what they are doing, instead of like going into some new project just in the hope of like making quick money overnight. So thank you for those recommendations. I think that is a very comprehensive list. to look into. So before we talk about like India specific regulation, I just had another question so sort of like to build a better understanding for people to get involved into DeFi. How do you guys see the role of stable coins in DeFi ecosystem? How do you define stable coins and why they are important?
So stablecoins are extremely important now still in the ecosystem. So let me first define stablecoins, because actually a lot of people don't know what a stablecoin is.
For
A
sure.
stablecoin is basically something that tracks the value of a fiat currency. So it's one-to-one. So at the moment in the market, we have US dollar stablecoins with a USDT, US dollar Tether, and USDC, which is the Circle's US dollar stablecoin. And that stablecoin is always one-to-one. So it's always going to be backed one-to-one with a real United States dollar. I mean, in theory, of course, they're backed by other type of securities in real life. But a stablecoin should always be one-to-one. There's no Indian rupee stablecoin, but there is a British pound stablecoin, there's an Australian dollar stablecoin, there's a euro stablecoin. So a lot of those stablecoins are coming. And I think it's a matter of time before one of the larger exchanges in India or somebody starts launching an Indian stablecoin as well. So that was
So there
always
was
going
one,
to be
by the way. There was one recently that I read about. Not really researched on it yet. It's called the True INR, and I think it was on Twitter a couple of days ago, which spoke about it being an Indian rupee stablecoin. But that was just for context. I don't think either one of us has vetted it yet, so I guess we're not going to
Actually,
talk about it in detail.
I think True is trying to build a business there. So I don't want to segue there, but I think True is trying to business there because True is the one that has the Hong Kong dollar, euro, Singapore dollar, Australian dollar, New Zealand dollar. And I wouldn't be surprised if they have the Indian rupee as well. So they're trying to play that other FX game in that sense, stablecoin game. So maybe that's a stablecoin there. So that's the definition of a stablecoin. It's always one-to-one. So that's the definition of now there are two types of stablecoins as well. One is a centralized stablecoin, which is like USDT and USDC. What do I mean by when I say centralized stablecoin? What I mean is, in theory, they say that the $1, the USDT or USDC that you have, is backed by $1, $1 in a bank account somewhere in the world. So it's a one-to-one backing stablecoin. There's also a concept of a decentralized stablecoin, and the most popular one out there right now is DAI and USD. So DAI is a stablecoin, and it's sort of an algorithmic stablecoin in that sense, or over-collateralized stablecoin, I should say. So what happens is you have a bunch of Ethereum, let's say $100 worth of Ethereum, and you pledge that into a vault, and in return you get $100 worth of this stablecoin DAI. So DAI, which is then convertible to US dollars, and you could then participate in the rest of the ecosystem using that. And there's UST as well, which is again an algorithmic stablecoin backed by Terra Luna. And then it's the same sort of process where you have to bond Luna, and then you'll get UST in return, and which is considered a stablecoin, and then you can then use that to do other things within the ecosystem. So those are the different types of stablecoins in the market at the moment. Backed stablecoins with a centralized and then decentralized sort of stablecoins. And it's extremely important in the market, right? I mean, I don't think we've reached the space in the world right now where people have started denominating their wealth in Bitcoin or Ethereum. Everybody still denominates it in US dollars. And in this volatile market, people are always going to exit to fiat currency still right now. I mean, there's two things, all right? Let's say if tomorrow I told you the market's going to drop by 50%, what are you going to do first?
Move to stable coins.
Exactly. So there are two things. The true believers, they won't even move to stable coins. They'll move to Bitcoin. They'll say, okay, Bitcoin is a king. Bitcoin has been around. Bitcoin is a gold, and I'm going to move to Bitcoin. But 90% of the people will move to stable coins. So the role of stable coins in the entire ecosystem is extremely important because it gives people an exit from the volatility in times of uncertainty. If there were no stable coins in the system, then I mean, with this entire derivatives market, payments market, all these markets wouldn't have been built, because then you're only operating on Bitcoin and Ethereum with nothing to sort of interchange and move around with or transfer value around in a stable way. So
it kind of makes it easy for people to understand the ecosystem and for products also to build their unique solutions of all sorts.
Yes, 100%. We're not in the space where we denominate wealth in Bitcoin or Ethereum yet. Like if I told you that it's going to be 600 Gwei for gas, you're gonna say, what the hell are you talking about, right? And then if I tell you it's $3 or $6 for gas, you get it. You're like, okay, it's $6. Okay. So because the industry is only, it's less than 10 years old. I mean, some of this entire decentralized stuff is actually only 2 or 3 years old, actually, not even more than that. So people are still stuck in thinking about things in a, fiat currency way, like how much does it cost in dollars or rupees? Maybe in a, 15, 20, 25 years, I think maybe then people will actually start denominating in sats or Gwei for Ethereum. But I don't see that happening in our lifetime. So stablecoins 100% required, and whoever cracks the Indian stablecoin market, in my opinion, and if this space grows, it's an easy business with a lot of money that you could make over there, the stablecoin space.
Okay. So one sort of follow up or a related questions. You mentioned there are two types of stablecoin. One are centralized, and other are algorithmic, so to say. So going forward, I mean, looking into the future, maybe not too distant, but like short term, 2 years, 3 years. How do you see it? Which one do you think will prevail in the market?
There are two things. One, personally, I think the centralized stablecoins like USDC. Actually, I would prefer USDC than USDT, because USDT, I'm not sure if people have seen, they are backed by US dollars, but about 20% roughly of their assets are actually backed in some sort of hybrid securities where they might have exposure to some junk bonds and stuff. It's unclear, and nobody's been able to totally clear that to people. So maybe about 20% of the books is not as clear, but USDC is quite clear. So USDC is a centralized stablecoin. For the moment, I would trust the centralized stablecoin, and I know it's against the ethos for now, but for the moment, I'll trust the centralized stablecoin because no algorithmic stablecoin has had the track record of surviving for more than 5 years so far. DAI is there, but DAI has now started, doing multiple collaterals. So, you could have a little bit of Ethereum, you can have some US dollars, you can have other sort of collaterals in it to back DAI. And I don't know what happens at a black swan event yet. So in a black swan event, if you have liquidations like recently, I think last month, the crypto markets crashed 30, 40, 50%. What happens if like $600 million worth of Ethereum had to be liquidated in one of the MakerDAO vaults because somebody took leverage? And then does the DAI peg remain, or what happens? What happens in that sort of situation? And similarly for Luna, I'm pretty sure with UST, the algorithmic stablecoins, we saw that if Luna dropped below 42 or something, I haven't checked the math, but some people were claiming if Luna dropped below $42, then the peg would be broken, and then UST wouldn't be 1-to-1 backed anymore, and then it will go straight down to zero. So, I mean, there's a lot of uncertainties in the algorithmic stablecoin still, and none of them actually have a long enough track record for me to fully trust it. That being said, if the Federal Reserve or the United States government comes hard down on on regulating crypto and going really hard, like, we got to ban this and we got to stop all of these stable coins and do all of that stuff, then staying true to the ethos, you're going to be looking at a decentralized stablecoin like DAI or UST, because no central government, nobody in the world can ever control that, manipulate that, print that, or whatever. So from a ethos, from a DeFi India and DeFi ethos perspective, I support decentralized stablecoins, but at the moment, I wouldn't put too much of my money there because it's to be tested in the market. I would be more comfortable if they survive for another 2 or 3 years and weather a couple of more, flash crashes and downturns and stuff. That's when I'll build faith in them, a little bit more.
Yeah, for sure. It's like both are risky, but at the moment, and ideally you would want a algorithmic stablecoin for the larger ecosystem. But at the moment, it seems like the risk is less in centralized stablecoins than in these algorithmic coins.
Yeah, that's right. Yeah.
Okay. Yeah, I think that gives a fair bit of idea about like what you guys are about, what DeFi is, and what stablecoins is. The sort of like what I wanted to cover, and let us move a bit about like India specific things, like what the government has been talking about crypto like for years now, starting from the RBI ban that was like cautionary notice provided by RBI. Then banks created a lot of friction in between. Banks stopped providing services to crypto exchanges, even though RBI had no such rule to ask them to stop providing services. And now further they were talking about banning cryptocurrencies. They had certain bills presented in the parliament. We don't know what the contents of that bill were. We just know the headline it was mentioned. But and now in this budget session, the government comes out with a 30% tax and 1% TDS. So let us talk about TDS and 30% tax as well. But Sam, if you could explain, like, how are you reading this, how the government is looking at the space, and how it has evolved in the like last 2-3 years?
Absolutely. So look, I mean, the government, specifically RBI, has been apprehensive around this, of course, because it threatens the stability of the Indian rupee, like they said, in more ways than one. The government's not really been able to sort of make up their minds. And, for the good part of the last 2 years, this was not really a direct threat. And so, they had more important things to do. The adoption, which really caught on thanks to the DeFi boom, so to say, plus a lot of these projects coming up over the past year or 18 months, really sort of promoted and encouraged a lot of growth in these exchanges. A lot of the volumes came in. Lots of Indian guys started coming to the space, and the government started taking attention. Now, we've seen on and off that, every time they try to table this in the parliament, and then, they can't discuss it because of obvious reasons. So even the last time when they were trying to table it in the winter session of the parliament, the fact was that it's not that easy, because even if you have a bill, you have to pass it through your internal committee. You have to get it through the desk essentially internally that looks after this, and the steering committee and things like those. So that it wasn't done, and the parliament session was on. So it became pretty obvious that it was not going to get tabled in the parliament session. And they've tried doing this a couple of times over the past 12 to 18 months, only to fail. And the reason is, of course, they've met with a lot of resistance from the community, one, again, for good reason. And second, because the space rapidly started evolving itself. So 18 months ago, it was a lot easier to maybe place a blanket ban. But at the time, the government wasn't really bothered because the space was too small. And now when the government is actually bothered and they're considering, from their perspective, maybe a complete ban or something, there's a lot of resistance from the community with so many participants in the market. And so essentially, time and again, we've seen they've deferred it. They had to bring out taxation on this because it's been a key issue. Every person trading high volumes and invested, in the market over the past 2 or 3 years has seen tax notices come their way. Tax officers, alike have no idea on how to treat this income. Some guys are showing it as capital gains. Some guys are showing it as business income or other sources, and so no one had any idea. So at least with this in this budget, and it was highly expected for this to happen. They've imposed a 30% tax. Yes, it is punitive, but I think it's a step in the right direction. The government is trying to at least meet us, maybe not halfway, but 30% of the way. And with time and and that, no pun intended over there, by the way, but with time, of course, with time, the space will evolve. A lot of the guys developing from India, and we've seen Polygon now, which is essentially one of the richest valued startups to come out of India. I think only maybe even larger than Paytm. I've not really checked Paytm's market cap off late after its tank. So with these developments coming up, the government's going to take notice. The government is keen on a lot of these Twitter Spaces sessions. You would see that you've got some MPs and MLAs from different parties, like Aam Aadmi Party, BJP, these guys coming in. We've been approached by some political journalists to clarify and really just to talk about what crypto is. Unfortunately, a large part of the population still believes that cryptocurrencies are a substitute to the Indian rupee, without really understanding that the key economic value of a crypto asset is the underlying protocol and the fact that they're actually doing business. The fact that it's easily transactable doesn't make it a threat to the Indian rupee. But so in a nutshell, I think the 30% tax was expected. I'm surprised that they didn't create a new slab for crypto specifically. It could have been as high as 40 or 50%, but it's 30%, which is the highest tax slab. A lot of the guys who complain about it, I feel them, of course. But the fact is that in India, if you're making anything more than 10 lakh rupees, anyways, you're taxed 30%. And you get taxed 30% on, incomes like, lottery or horse racing or things like those. And the government sees this on par. The good part about this is that at least we're moving to some sort of legitimacy compared to complete ban. The bad part is, of course, we're starting very steep with the 30% tax, and of course with the TDS, and the fact that you can't set off your capital losses, and those more finer nuances.
Yeah, for sure. I understand that it is I am of the belief that it is a good start because like before a couple of months we were talking about, like the government were talking about like banning cryptocurrencies, not explicitly, but like those were the rumors we all were hearing, and now it is like we are going to tax this thing at 30%, whatever. So I think it is like at least a positive step, wherein like we are not talking about ban, we are talking about like how do we participate in this ecosystem, make sure we have certain regulations, make sure that the ecosystem keeps flourishing. And India definitely needs more entrepreneurs, more startups, more jobs for our economy to grow. So I am actually not I don't want to talk much about it, but like it could have been like as high as 40% or 50%, because the luxury tax is in that range, and plus lottery and all these things, those tax range into like 40% plus. So I guess 30% is decent to start with, but okay, so
it's a little give and take, right? So I think it's a little bit of give, it's a little bit of take. I think we should look at it more from a neutral standpoint. We're hurt, of course, as the part of the crypto community, but I think we should be happy that until a few months ago, the boomers, like you said, kept on saying that we'll see complete ban, and reversing course from a complete ban to a regulated industry is much harder than making your way through a 30% tax, that getting it lower. And we've seen that journey in equities as well, and commodities as well, where the government initially taxed the hell out of you, and then eventually realized that this is essential for capital allocation of of the country, and they started sort of becoming more lenient around the space, and now they welcome it, and they're happy about it.
Okay. So the question I have here is like whenever a country decides to think about regulating cryptocurrencies, like what is the first thing they do? Is it like taxing the gains, or like what is the first piece of regulation that has been done otherwise in other countries?
So see, in terms of regulation, particularly for emerging markets, what's the key threat is capital flight. The government is very, very concerned about the stability of their own domestic currency, because once you lose control, it's a riot. The government can't function, and it becomes a full-blown civil crisis. So for them, what's most important is the stability of the currency. And for that, they need to ensure there is no capital flight. And that is one of the key areas of contention for the Indian government as well. And that's when we heard the fact that, they'll ban transfers from your centralized exchanges to MetaMask, or essentially to anyone else. And the thought process behind that is not because, mere mortals like us, not to cause inconvenience, but the thought process is it's very easy today for you to move value from, just depositing Indian rupees into WazirX and moving Bitcoin out of the country. And if that continues happening, and if people continue doing that to overseas assets or for whatever reason, it really threatens the stability of the Indian of the Indian rupee and any other domestic currency. And so the government comes from the perspective, they're not really concerned about the taxes as well. Look, to be honest, the government in India, I think, has a budget of about 35-40 lakh crore rupees, if I'm not mistaken. Crypto is not going to make a dent to that. I mean, it's not, even if they tax us 30%, even if they tax us 50%, it's not like it's going to be a huge income revenue source for the government today. Maybe in the future, pretty much in the future, but not today for sure. The government and regulations in any country will first focus on capital flight and making sure that they don't lose control over their currency, and people don't start moving money in and out of the country. Just to give you an example, today, if you want to move money out of the country, the liberalized remittance scheme allows you to do that to $250,000. That's $250,000. Anything beyond that, you need to seek the regulator's approval. If you're making an investment overseas as well, a lot of the times you need to seek RBI's approval because they want to make sure that the money leaving the country is, genuine, and it's been declared, as legitimate. Its source of, the source of the funds have been declared as legitimate. So that's the first area and the key area that countries look at when they're looking at crypto regulation and policies, is to make sure that they can keep a track of what's coming in, what's going out, and who owns how much. The tax part is really secondary. It's easily doable as well. You just have to go into a budget session and announce the percentage of tax, and then that's it. That's the easier part. The harder part is to actually build a framework and policies around how people can operate within the space.
Yeah, makes sense. Oh, okay. On that point, so is it safe to say that this is not like done yet? There will be a bill, there will be a law which will be proposed, and that frame,
absolutely,
and then it will go live.
100%. So we've said this before. Yeah, we've said this before. The government is still trying to understand the space. If you go to a Sarkari Babu today, for him, cryptocurrency is still akin to any other currency like Indian rupee or yen or something. They don't understand that these crypto assets represent underlying ownership protocols which actually generate revenue. So something like an Ethereum generates $18 billion in revenue every year. So you're essentially buying a part of a startup. They don't see it that way. So yes, so from that perspective, the framework is not there, the policy is not there, the government is completely blank. And the crypto association as a whole and the lobby needs to sort of educate the government.
Okay. So I guess it doesn't make much sense to get deep into like why 30% and how 1% and why it makes a difference. But like just to talk a bit about it, like how they are seeing it as of now, when they say that we will do 1% TDS, does it mean that every time you do a transaction to anybody, you will be charged 1%?
So it's not a charge, it's withholding. It's like the TDS on your salary where your employer withholds it and then it comes to your credit. Now they have thresholds for individuals. I think if I'm not wrong, I think it's about 50 lakh rupees or something, but it really applies to exchanges, where it becomes a problem for traders. So, and the reason TDS is so that if you're not declaring an income, say if you're getting an income from Nestle or Adani or Reliance, you can choose not to declare it. But what happens is because Adani is a large corporation, they will declare it in their TDS returns that we've given 100 rupees worth of income to Chetan and we've withheld 1 rupee. So even if you don't declare it, the government will come to know that, okay, you've not declared it, but Adani has declared that they've given you 100 rupees. And that's what they're trying to do with TDS through exchanges as well. They're trying to tell exchanges, you start withholding the 1%. So, if someone doesn't report their own income, we'll get to know through your returns anyways that this guy's withheld information. And then you can go and start sending them legal notices. So that's the perspective, and that's the concept of TDS. Now the 1%, it's high. And I say that because the government probably doesn't even know, the volume of trades. They have a very rudimentary understanding, but they don't understand the 1% tax. Again, this was the concept that we brought in first on Twitter, that the 1% tax by the end of, a certain number of trades, like 100, 200 trades, you'll actually end up losing your entire capital. So if you start with 1,000 rupees, even if you sell at loss and get back 900 rupees, they will withhold 1% of the 900, which means 9 rupees. You'll be left with 891 rupees. The next time you trade, that keeps on happening. So by the end of the day, you'd actually have about 10%, 12% over 10, 12 trades locked in as TDS that only comes to you. So say if you make your trade on 1st April 2022, in July 2023 is when you file your return, and your refund will probably come by September or August to September of 2023. So that capital gets locked in with the government for a period of 1 or 1.5 years, and that kills the trader. That kills the Indian order book. So people will suddenly start trading and you'll see dried up volumes. So, essentially I'm a hodler, you're a hodler, everyone's a hodler. And traders have been, because of this punitive regulation, traders have been incentivized and discouraged. And then suddenly you see, volumes tank in Indian order books. And once that happens and the market becomes illiquid, even hodlers start getting jittery.
Yeah. I mean, it when you try to understand it, it seems like, that is not practical, and that is not the government also. They don't want people like moving money to outside India exchanges. So I guess, as they have more understanding of it, they decide not to go ahead with it or do some modification in the 1% thing. And this is like, we are still talking about like what has been proposed. This is not like actually happening right now. If you are trading today, you don't have to, nobody's withholding your 1% TDS, right?
No, not today. So they said effective July 2022. And if you read the entire clause, the government said that they have the ability or the power to sort of change it or enforce it or things like those. So they've left a clause over there, leaving the flexibility for the government. If you ask me, I've seen the implementation of a variety of different bills like the GST. I'd say it probably won't get implemented by July either. it'll take a long while before it's implemented. It might never get implemented at all because there are two areas to this. One is that the government wants capital flow. They want the TDS to come to them so that they can, sort of have the revenue in their pockets earlier rather than later. And the second is identifying people who are making money. Now, the second problem, if it's, the key problem over there, it can be easily sort of, dealt with if exchanges start sharing all this information. They don't necessarily have to deduct TDS. But if it comes to the revenue part where the government is looking at it as a source of revenue, which they've been very clear about, we'll have to see how much that revenue amounts to and how strongly the push from the Indian crypto community, is.
Right. Okay, just for the benefit of listeners, I mean, this is something, the 30% tax and 1% TDS is something which has been proposed by the government, but it is not implemented yet. And we need to watch this space closely to understand it better and how it develops. Okay, so I guess, I mean, Sam, do you want to, talk about anything else related to regulations specific to India?
Nothing as yet. The one thing that we've been sort of encouraging the community to do for a while is that, we have to set up a lobby or an association, an industry body that can go and represent with the United Front, that can go and represent our cause to the government. Without that, if we have people just complaining over Twitter, it's not going to work. I'm sympathetic to the cause, of course, because I'm here myself. But the fact is, we need a stronger, more official and formal way of communicating this to the government, which I'm sure sooner or later will happen.
If I'm not mistaken, I think there is one such body of exchanges which they used during the all RBI backed thing.
So hence the word United Front, because when exchanges do it alone, they look at their own benefit, and they'd be the happiest of the bunch at the moment because there's taxability, there's taxes, so they have a little more of a runway now with legitimacy. But for users like yourselves and myself, it doesn't help.
Yeah, makes sense. All right. I mean, I guess we are into the last leg of the podcast, and here I want to talk a bit about like overall crypto ecosystem. So we talked about like specific DeFi, and we talked about like India regulations, but just wanted to get some of your thoughts on the overall ecosystem. So to start with, how do you guys? How do you guys see Bitcoin versus other cryptocurrencies? Because if you listen to some of these Bitcoin maxi arguments, they are like only Bitcoin is what matters, nothing else matter. I am certainly not a maxi because I understand that 2/3 of the market is still altcoins, but just wanted to get your perspective on that.
Yes, I'll take this one. Bitcoin is a pristine collateral asset, no doubt about that, 100%. So I agree with the maxis in the sense that Bitcoin is pure, Bitcoin is pristine. Yes. However, everything else doesn't have value is wrong, I believe. So Bitcoin, obviously, it's a very graceful sort of coming of it. Everything was locked when Satoshi made it. The Satoshi is not to be found. Maybe he's passed away. We don't know. We have a fixed supply. We have a set inflation schedule. And it's hard money in the sense that nobody can change the output of Bitcoin or the max supply of Bitcoin. So what the main point of, I guess, argument for other people is that, in all these other coins, the DAO can get together, the developers can get together and change the monetary policy. So for example, for Ethereum, recently we had EIP 1559, which was actually beneficial for the Ethereum users. But at the same time, you could see that they sort of changed the monetary policy because they said that, okay, now we're just going to burn a portion of this. Now, what's to say that in 2 or 3 years, they're going to say that, okay, now we're going to actually change the inflation because of XYZ reasons, or we're going to burn this extra part because of XYZ reasons. We don't know. There's always going to be some sort of uncertainty with all the other protocols. I think even with Avalanche and Solana and some of these other coins, Avalanche, I believe, has a fixed supply of 700 million tokens. However, they haven't made it clear that if in 3 or 4 years or 5 years, if it becomes very popular, that a DAO can come in and a DAO can say that, hey, you know what, let's just change the max supply from 700 million to 1 billion. That's possible. It's not impossible with a lot of these other tokens. So with Bitcoin, what you can find peace with is that 21 million fixed supply is almost certainly not going to change, because that's just not going to happen, because that's the premise of the entire belief system around Bitcoin, the religious sort of fervor around it. So that's what they actually that's what actually the Bitcoin guys actually think, that okay, no, Bitcoin is real, it's true, it's fixed, and everything else is crap because you can change stuff whenever you want. Like Sushi Swap can come on side if you use some of the dramas on Sushi Swap on DAOs, on Discord. They're like, let's fire this person, let's move this treasury amounts, let's do this, let's do that. They're just changing. It's an ever evolving tokenomics thing, which they don't feel comforted with. So that's where they're coming from. However, I wouldn't discard this entire thing. The alts ecosystem is extremely powerful, because that's what helps us build the new decentralized sort of world. Bitcoin is very dumb in a way that it's a payments thing, right? Point A to point B, you transfer it, it works, it's a store of value, fixed supply, fantastic, hasn't been hacked, has no rug pulls, no nothing, very stable, very nice, very trustworthy. However, that's that. I mean, there's the Lightning Network and stuff that they're trying to do things with, and people are trying to build smart contracts on top of Bitcoin, but holistically, Bitcoin is that. That's 99% of the volumes, which is just simply store value. Now, in order to build this entire decentralized world that we're looking at, which is we're looking at NFTs, we're looking at metaverse, we're looking at this decentralized sort of borrowing, lending protocols, asset management systems, and so on, you need programmability. And with programmability, you need sort of some flexibility in the tokenomics, because, it just sort of, you can't have one or the other. You sort of need some of that flexibility in that. So obviously, I mean, it's what you're comfortable with. If you really like that fixed supply, that this is a fixed supply, it's never going to change, and I can sleep well with this, that's fine. That's your risk metric. That's fine. However, don't discard the alts either, because they really have the potential to change the entire world that we live in right now with decentralized intermediaries. Like, absolutely change it. I can see it in the next 10 years that many of the smaller nations that are running their own tech stacks and infrastructures and all of that stuff will just say that, you know what, just screw it. We're not going to manage all of these costs, manage all of these things. We're just going to join, for example, DYDX. So we're going to join Serum and list our national stock exchange on this decentralized platform, because then we don't have to worry about all the IT infrastructure, security, so on and so forth. So that type of stuff cannot be built on Bitcoin, for example. It can only be built on some of these other sort of protocols like, Ethereum or some layer 2 solution if it comes around and says Solana or Avalanche or whatever. So yes, I'm in the camp that both of them have their use case. It just depends where you sit on the risk spectrum.
Yeah, right. One of the counter arguments that, so to say, there is that like these other L1 chains have high concentration, high centralization in terms of the funds or the tokens that are being held by the team and the early investors. So how do you feel about that? Are you okay with that? Because people say that it is still better than the traditional tech businesses or traditional equity businesses, where people do not really have option to get involved until and unless a company does IPO. But here at least you have an opportunity to get involved in the project right from the start. So how do you see it?
Yep. So that's a fair point as well. So every project has taken different tokenomics, 100%. So it's only a problem when it becomes a problem when the project becomes successful. So what people forget is, for example, Solana. I think Solana has the biggest reputation on it's a centralized VC coin, because so many VCs have it. What people don't know is that Anatoly, or the Solana guy, he was actually pitching to people, for months, and everybody just told him to bugger off. Everybody's just like, just screw away. There's so many other things like, we're not interested in your project and stuff. And he was more than willing to sell his tokens for 3 cents or 30 cents, I believe, to a large percentage of whoever was willing to buy it. And nobody did it. Eventually, they listed as well. And I think the infamous Sam Bankman-Fried tweet where Solana was trading under $3 and everybody is still calling it shit all the time and saying that, that was liquid sort of market there. You could have gotten access to it. Many people could have gotten access to it, but everybody sort of ignored it at that point. And then when it became popular, then people started saying, oh, it's a VC centralized shitcoin. But what they don't realize is, yes, the VCs actually who believed in it, funded it, ran the nodes and stuff. It's huge capital infrastructure as well that's required to get a project off the ground. So that sort of VC funding is sort of required. And frankly, a lot of the people could have also gotten it on public markets, like in Solana's case, very early on when it was very, very cheap. Then it just took off, and then people started finding mistakes onto how they did their tokenomics and stuff. Now, not all projects are are good. Some of them really screw up on their tokenomics. Like 90% is held by the team in some shape or form. Some of them are a bit fairer, but I think you cannot avoid the entire VC angle right now. You could have avoided it with the ICOs, in 2017 when the regulators weren't there, because that was raw crowdfunding. But the amount of rug pull scams that happened that forced the regulators to come in, and now you got VCs as a vetting sort of thing, So like no shit doesn't get through. Like if VCs are backing it, normally they've done their due diligence before something actually moves up in the world and sort of comes onto CoinMarketCap or CoinGecko and starts trading and stuff. So I think it can't be avoided. Tokenomics could be changed between some projects. Unfortunately, not all of them get it right, but it's definitely a leg up from the traditional world where people literally get 90% discounts and there's no access, and by the time it IPOs, it's like 500 times multiple already, and then they just dump onto you immediately. Something.
Right.
Yeah, so see, one problem was that everyone complained in the TradFi industry that they don't get access to a lot of these early startups. You still do, but it's not very publicly available. And they generally can't get access. And the fact is that this is a venture sort of growth market with public market liquidity, and people do get access to it, but no one's willing to really sort of stay committed and stay true to the course. So even early believers in Bitcoin probably already sort of started selling as soon as it went to 10x, 20x or something, and dropped off sort of the holder list. And so I think this is an occupational hazard. I think it's the nature of the industry where you will always get a concentrated set of guys early backing the protocol and the business, and then eventually they'll start distributing their ownership amongst the larger crowd as and when sort of the product matures. And so I don't think it's a point to sort of complain. Like Pat said, everyone had access to it, and yet folks decided not to get it back in the day, and then they start whining about it now. So sort of unfair.
Yeah, makes sense.
And can I remind as well that a lot of the VC tokens and stuff are vested for 4 to 6 years. Or they're vested at yearly basis and up to 4 years. So, I mean, we're in this industry, right? I mean, risk and reward. I mean, if you told me to lock up 10 crore rupees or something into a project and I can only take it out after 4 years, then I certainly need some sort of discount on my thing. I'm not going to go 10 crore for 10 crore, right? I need like a 30-40% discount for taking that huge amount of risk and opportunity cost for locking that up for 4 years. So I think that's fair. And I think the VCs in the industry are necessary as a way of vetting the project and bootstrapping them and helping them right now. Like ideally, the really, really good projects don't even need VCs, because if ICOs were allowed. But unfortunately, there are more bad actors than good actors in the industry as well, with all the rug pulls and scams and stuff that the government had to come in and just block ICOs basically, and that opened the market up for VCs basically. So now they've got a bigger piece of the cake.
Yeah.
And for every successful bet that they have, they probably have 100 different sort of failed bets, and so they're also absorbing a lot of the R&D risk for the entire industry and allowing for everyone else to participate much later. After essentially sort of shielding them from the early stage risk of these projects.
Yeah, VC money is actually, that money is actually helping you experiment with different type of stuff, and then potentially 1 or 2 things will click, which will benefit everybody. So, yeah. All right, guys. Yeah, Sam, go ahead.
No, I just said absolutely. I agree.
Okay. All right, guys. I mean, I think it's been like more than an hour. I would love to continue talking about NFTs and metaverse and all different L1s and everything, but I guess we can connect for that maybe sometime in the future. I mean, I would certainly be looking forward to it. And just to conclude this, if you guys want to mention some resources for people to understand, maybe some books, some podcasts, some courses, or how do you keep yourself up to date with stuff?
Okay. Thanks Chetan as well. By the way, we enjoyed the conversation, and it was and thanks for inviting us as well. It's a pleasure. So in closing thoughts, I think first thing, for people who want to learn more about this sector, there's nothing as good as trying things out yourself. Just commit to yourself that, just take 5,000 rupees, 10,000 rupees, 5 to 10,000 rupees or whatever. Just do it. Actually get a MetaMask wallet, get some Ethereum or get Solana or get Avalanche, whatever you like, and just do one thing. Go into Uniswap, do a transaction. go to DYDX and put a trade there. Or if you like the NFT space, use Polygon, the Matic network, go to OpenSea and buy just a 5-cent sort of token or something that's free, not token, but like an NFT. Try going to Aave and try pledging your liquidity there and see that you're getting interest. Nothing beats trying, because there's a lot of people that I've talked to, including some traditional finance guys who have 20, 25 years of experience. They've watched 200 hours of videos, but they never tried it because somehow they're still afraid that, I might lose my money. I'm like, yeah, you'll lose your money, but maybe you'll lose your money, but 5,000 rupees or something, you have to pay an education cost to try it. So you could read 10 books, you could watch 200 hours of podcast videos and stuff, but you're not going to get it until you try it. So in my opinion, just convince yourself to put aside 5,000, 10,000 rupees. Admit to yourself that, okay, I might probably lose this because I'm going to do something stupid, but that's fine. It's an education cost. And just try some of these protocols, because that's when the flywheel will start going in your brain, where you're going to go like, okay, well, Uniswap was too expensive. What's the alternative? Okay, people said Solana, so let me try Solana. Okay, wow, Solana was very quick. It was very cheap. Okay. So what's the alternative? So what's Avalanche? And then you start figuring out the ecosystem. You start figuring out what's good, what's bad between different protocols, and you learn much, much, much more faster than just watching 200 hours of videos or reading 5 or 10 different books and trying to get a theoretical concept of that. That's my opinion. And that's for all the beginners and stuff. That's what I'll say. And then eventually, as you get into it, when you're intermediate and stuff, then obviously there are many, many podcasts and other things that you will eventually find. But don't bother thinking in 200-300 hours, just reading books or listening to podcasts. Just try it. Maybe you'll lose 5,000, 10,000 rupees. But you got to try it. I mean, you got to pay to learn, basically. Otherwise, it's not going to make sense. That's my...
Yeah, I mean, I totally agree. This is something that I have experienced myself. I used to like watch a lot of videos, read stuff here and there. And then like one day I decided, let me just try these protocols. And like, it is liberating. Once you use the protocol, you truly understand how it works. Even though, I mean, you don't know how to code, but if you use the product, you understand it much better. So yeah, I mean, great advice. Thank you so much for that, Pat.
Yeah.
Sam, you want to say something?
No, that's it. I agree with Pat. I echo his thought that, look, I mean, we're just talking about access a few minutes ago, and folks have access to all of this, right? So instead of reading, articles and blogs about, how stuff is done and how people do it, you might as well try it yourself. I'm sure you're going to lose more than 10,000 rupees in gas fee if you're using Ethereum. But that's just the best way to learn it. That's just the best way to do it yourself. That was a joke, by the way, about the Ethereum gas fee.
No, you're right. Yeah, you probably did. I think I lost. I think I spent 4 or 5 lakh rupees last year in gas fees alone until I went like, I need a solution to this, and then I moved on to some other chains and alternatives. But that's how you learn. Like, you're like, shit, I paid a lot in gas last year. So yeah, you got to try it, and that's when your brain starts working, and that's when you go like, all right, I want to look for solutions, and then you understand the ecosystem. If you just read the blogs, you're very likely just going to be some sort of maxi. Like, there are Cardano maxis out there that have never tried a product because no product exists, but they just keep on reading blogs and videos and watching Charles Hoskinson videos for like 60 hours, and they believe in the product, but they never bloody tried it, so they don't know it's not delivering anything. So the first thing to do is to try it. And you're going to see for yourself if the product is good or if it's lies, what the pros are, what the cons are. So you'll try to see if, whether Ethereum makes sense or Solana makes sense or Polygon makes sense or so on. So try it.
Absolutely.
Yeah.
All right, guys. I guess that is it. And I really appreciate you guys taking out time and having this conversation with me. I hope, I certainly learned a lot from this conversation. I hope my audience also gains some value out of this. And I hope to do this again sometime in the future. Thank you so much.
Thanks, Chetan.
Thanks, guys. Thanks, Chetan.
Thank you so much for listening till the end. I hope you gained some value out of that conversation. If you did, make sure you like the video, make sure you subscribe to the channel, make sure you follow the podcast, and share it with your friends and family who you think would also enjoy listening to this conversation. And if you have any questions, drop them in comments below or reach out to me on my socials. I would be very happy to have a chat. And thank you so much once again, and I will see you in the next episode.